read this disclaimer. Morning, good afternoon, good evening, depending on what time you'll be watching this video. This is Ed FX Trader, and today is the 1st of June 2018, making it a Friday. And so what I wanted to do here, it's the end of the month, just to provide a update on the month of May, how I performed in the month of May. So, as you already know, my track record is on myfxbook.com. I am very transparent in my trading in terms of my performance. It can be viewed at any time you want to. So I'm on my FX book, and I am just going to look for the system which is called Power to Make Wealth. Here it is, and this is my system, right? So right here, this is one of my live accounts whereby all my trades are tracked. Every trade place is tracked, and this website provides statistics on my trading performance. So the last update I gave was on the month of April, where I did 20% increase on my account, and in the month of May, as you can see, I did 17.8% increase right over the period of May. So what that really means, let me explain something. So if at the end of April, okay, let's say I started April, let's say I started April with $1,000, and then my account increased from $1,000 to, let's say, $1,200. Okay, now I would start May with $1,200 because I'm not withdrawing anything from the account. So I would start May with $1,200. So I started April with $1,000. Let's say I made $200. So I would now start May with $200. So when it says that I've made 17.18%, it means that I've made 17.18% on what I started May with. So I made 17.18% of $1,200, right, in this example, right? So that is what it means. So my account continuously increases, and I just reinvest each time, right? Because I have a plan, I have a goal, I have a retirement plan that I have set. Actually, if I'm able to do 5% a month, just let's say I'm able to do 5% a month, in 8 years time, I'll be able to retire comfortably, right? Now, definitely I'm going to more than likely be able to hopefully retire before that. But in terms of just strictly trading, there are ways and means that I have of increasing this exponentially. But just by way of trading, that's what I intend to do. What I'm going to do this time is I want you to realize that in just this year, I've gained 61%. Okay, my overall trading account is up 78.26%. So in a few months, I would have doubled, probably in the next 2 to 3 months, probably I would have doubled my trading account. All right. Now I'm currently winning 79% of all my trades this year, and I've placed 233 trades, and I'm winning 79% of it. But I mean, percentages really mean nothing, because with proper equity management, the truth is that you can be winning 30% of your trades, losing 70%. But because of proper equity management, in other words, you're risking $1 to make $3. So you can win, you can lose 7 times, or let's say place 10 trades, but you trade in such a way that you risk $1 to make $3. So you can lose 7 times and win only 3 times and still take money to the bank. All right. So I mean, percentages can really mean nothing. Persons can have a lower winning percentage and still be making more money than I am. Right, now what I wanted to do definitely in this video is that I'm going to actually show you some of the trades that I place. Right, now you can go on this website yourself and you can see. But some of the trades that I place in the month of May, some were open. Some of the trades were placed from April, and I stayed in the trade over a month and end up being profitable. And one of the things that allows me to do this is because of my education. And once you know and you are confident about your trades, because at the end of the day, you know, trading will come down to belief. Is that you believe that this is going to go up or down based on whatever it is that you're used to telling you to give you direction. So what I'm going to do is I'm just going to go through. I wanted to point out this trade, the Canadian Japanese yen. As you can see, I was 1, 2, 3, 4, 5, 6, 7 trades I placed on this one currency pair. Now, this first trade here, I entered that trade from the 10th of April, right? And that trade was closed on the 24th of May. I was in the trade over a month. Let's just definitely say that I got my entry wrong. I entered too early, but I fully believe in the direction of the trade, and so I stayed in it. All right, so I stayed in the trade over a month, as you can see, and I walked away with 10.7 pips. I entered and I walked away with 94 pips here, 95. I made 178 pips here. I lost 101 pips here, lost 100 pips there, lost 76 pips there, and I made 83 pips here. Now, let's just calculate this. I want you to let's just see if I was net profitable on that trade that I held. Okay, let's see. We start at the 10. So let's say 10.7 plus 94.9 plus 178.3, right, minus, what's that, 101 minus 101 minus 76.9 plus 83.7 equal. I still was not net profitable of 90 pips. And I mean, what should I say to you? This, being able to do this, is a skill that you have to know how to make money when you're right and how to make money when you're wrong. Now, I mean, if you're right, you're right, and you'll make money. But one of the skill in trading is knowing how to make money when you're wrong. And the reason why that is important is that when you plan your trade, you have to plan in such a way, say, well, what if? You know, and being a chess player, that's something that we always ask ourselves. If I make this move, you know, what if my opponent does this, or if he does this? And so you have to look at all the possibilities and stuff like that. Some, of course, you can eliminate. So when you place a trade to sell, you're expecting the market to go down. But what if the market goes up? You can decide, okay, well, I just take the loss. Or you can decide I'm going to multi-level the trade, which is what I did, and still end up walking away profitable. Now, I don't do that for all trades. As you can see, I bought the pound yen, was fully convinced that the pound yen was going to go up, and lo and behold, it went down and I lost 119 pips. But that didn't matter to me. All right. I sold gold when I'm convinced about a direction. I really am. So you see, I sold gold here 1, 2, 3, 4 times. I sold it here 5, 6 times. The pound, Swiss franc, 1, 2, 3, 4. All 4 trades were profitable. I bought the pound yen and was profitable. I tried buying it again, but lo and behold, it went the opposite direction. But that's fine. Let's see here. I'm gonna look for the trades. Bought gold this time. I sold the Euro US, and I'm going to go back to the Euro US because I've been telling you about the Euro US, and I made 316 pips. Just that one trade increased my account by 2.24%. That one trade that I was telling you about. All right. And you can see I sold it several times, right? Now we're going to look at where the Euro US is, and where we're going to go from there. I'm going to show you a couple trades that are lining up. But as you can see, there are a lot of greens. I was profitable once again. So I think I am, where am I now? I'm now profitable 1, 2, 3, 4, 5, 6, 7, 8. 8 months being profitable without having a losing month. Okay? And we're not afraid of losing. We're not afraid of losing some trades. We're not afraid of going down drawdowns because we use proper equity management. If you don't have proper equity management, you cannot be able to do this for the long term. All right, and I can stay in a trade for over a month, as you can see, watch it go against me, enter it multiple times because of proper equity management. Now I would like to increase how much. I would like to definitely increase my winnings and stuff, but I will have to adjust my mindset first to be able to probably take more losses, but still even win more and stuff like that. I want to be able to increase my lot size, but that will take a different level of discipline that I would have to first adjust myself to and stuff like that. You have to know your trading style. You have to know whether you're going to be a scalper, you're in and out of the market quickly, or you're going to be a swing trader. You're in the trade for a couple of days, a couple of weeks, or you're going to be a position trader. You can be in it for a couple of months. All right, so I'm not going to quickly go to the charts. I will provide, what I'm going to start do is to provide a little bit more updates. All right, see, this is where we're at. I'm currently averaging 8.28%, and if you have been watching my trades and my updates, you know that this was at 1.5, this was at 4, and it went to 5. So we want to be averaging. If we can average 10%, that would be really good and stuff, but we're not trying to force it because we don't let our greed exceed our need and stuff like that, because this market can make you, but believe me, can break you if you try to be too greedy. Okay, that's a few pointers. Now prepare yourself. In a few months time, I'm going to be definitely launching a course. I'm going to be teaching investors how to trade the forex market. Where you can learn how to trade. I will teach you a profitable strategy that you can learn. You do some sessions with me, you can learn how to trade and be able to do this. All right, and I can mentor you. Now I quickly want to go to the charts. I want to bring up the Euro US just to see where we're at. I am going to look at the monthly time frame. I generally look at the higher time frames because the higher time frames control the price direction of the lower time frame. Let me just change this. All right, now when we looked at the monthly time frame, we saw this. I'm just going to put this here. We saw that we were in this channel, and I've been trading this channel, right? Because we noticed that whenever the market comes up here, it goes down, and the market was there, and so that's why I was able to trade the euro US and stayed in it for the long period of time. So it is our expectation now that this market is going to make its way down, right? To sell the euro US means that I'm selling the euro, I'm buying the US. What that really means is that I'm expecting the US dollar to increase, right, against the euro, right? I'm expecting the dollar to increase, right? Now, it doesn't matter who is the president right now. I want you to know that this structure has existed from, let me just, even if I bring this back here, this structure have existed from June of 2008, right? And a lot of things have happened since June 2008, all right? The market, we had the financial collapse, bam, right? Then the market recovered and then it went down. We have had a lot of presidents, we have a lot of earthquakes, we have had a lot of wars, we have had a lot of changes economically, globally, but the structure has remained. And so when the market forms a structure, it's either you got to believe in the structure regardless of what is happening. I'm not here to tell you that this market cannot break out of the channel. I'm here saying that this channel has been working, it has existed, and all that we can do is trade based on what we see, right? Now, the market has gone down, so what now? Okay, well, what now is that I'm going to be looking to, I actually want to now look to buy. Right now, I understand me carefully here. The primary direction of the euro US is sell. Now, if you just focus on selling, you're fine, right? But we understand that the market moves in waves. And so I am going to look to buy, and then I'm going to look to sell again. The safest thing to do, if you're a trader and you're listening to, the safest thing to do is to sell, the market. Now, the market don't have to go up. Though I'm looking to buy it, it doesn't have to go up, right? And the reason why I want to point that out is that when you look here, it went down, and it went a little bit up in this month, and then it went down, 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 based on the monthly time frame. But we know when you look on the lower time frame, it actually waves, right? But the primary direction is down, and so I'm really, 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 whenever a sell opportunity presents itself, I'm going to sell. I'm going to sell confidently. But when I sell, I want to sell at a high price. Now, money is made when you sell high and you buy low. So what I'm going to expect this market to do is to go up and then come back down, right? Now, this is what I'm expecting to happen. Let me just draw it out. I'm expecting that this market is going to go up to about there, and then I'm going to expect it to come down. That's my expectation. It doesn't must do anything. You know what I'm saying? Market can do what it wants to do, and the market will always be right. But that's my expectation. So I'm going to look. I'm just going to show this on a daily time frame. I am going to look to buy. The market is very low. I cannot sell the market. I can't. There's no way I can sell this. Right? This is way too low to sell. The market is this low. I can only look to buy. If I decide that I don't want to buy, I don't want to be a bull, I have to wait until the market comes up first. We have to wait until the market comes up and then look to sell it back down. But there's no way I can look to sell the market here because it is just too low. I need a high price. If I get a high price, I will certainly sell the market. So it's either that you wait until the market goes up, and if I was not looking to buy, I would look to sell here. At this point, I will expect the market to go up to about here. Let me see something. I would expect the market probably can even start selling it from about here and stuff. If the market goes back up to here, price point 1.20, sell the market. Sell the market if the market goes about here. Put your stop loss at about 200 pips, right? And if it goes up against your 100 pips, sell it again. And so, but this will be a place to sell, right? So that's what I will do. But I want to buy it up and then sell it back down. That's what my intention is. Now, to give you a whole different trade that is lining up, I'm going to give you a free trade here. I'm on the New Zealand US dollar, and I am going to go to the monthly time frame. I want you to see something here. And when I look at the monthly time frame, I see that the market is in, whenever I like to change these to blue, the market is in consolidation. All right, and let me just increase this. All right, the market is in consolidation. Let me carry this about here. And what you see happening here is that whenever the market touches the bottom blue level, it goes up. It goes up, it goes up, it goes up, it goes up, and it is touching it now to go up. It may retouch it again and then go up. Right, but as you can already see, it did touch it and did start to go up. Whenever the market comes to the top, it goes down. All right. Now, when did this market touch the top? At the beginning of February. And what did the market do? The market went down. It did what it has always been doing. When it comes to the top, it goes down. Comes to the top, it goes down. Comes to the top, goes down. So I have no other choice but to believe when it comes to the bottom, it is going to go up. Now, I'm going to say this, and this, hopefully this doesn't confuse you. I am expecting this market in the long run to actually break through and go down. When it will do it, I don't know. Okay, so what's the safest thing to do? Right, wait till the market goes up the top and then sell it back down. But I want to buy it up, because that's like 500 pips up, and then I want to also sell it back down. If I buy and then it breaks out, I'm going to show you how I will treat this. So this is a monthly time frame. Let's go to a more current time frame, which is the daily time frame. There the channel still maintains itself. Do you realize that in the month of April, this market, look here, when it came to the top, it just went down and down and down, and this was a lot of money going down, just like the Euro US that just went down and down and down. That's what this is. That's what this did. Starting in the month of April, just went down. Now we are at the bottom. We're going to expect it to go up. Now this is how you plan a trade. If you realize this pattern, all right, so you're expecting the market to go up, so you're going to buy. What if the market does not go up? Okay, so first of all, if you're going to buy the market, right, whether here or wait until it comes down a little bit more and buy it, you have to place your stop outside the channel. Because once the market is within the channel, I'm going to put this in red because we normally represent stops in red. Whenever, if they put your stop in the channel, then you put yourself in a position of losing on the trade, of being stopped out. Because the market is still near to the bottom. It can still, if it wants, as you can already see, the movement, it has gone up, comes back down, go up, comes back down, gone up, come back down, go up. We don't know if it's going to test it again. So there is no way you can put your stop right? Inside the I've been saying channel, sorry, inside the consolidation, right? Your stop has to go outside the consolidation, right? And if the market breaks out of the consolidation, then you're going to look to possibly sell. But your stop has to be outside the consolidation. So if I am buying, which I am actually already in this trade on my live account. Let me just show you this here. Because again, I am not telling you to do all my open trades are private. But I'm already in this trade. No, sorry. Yeah, my open trades are private. I am in this trade and I am already buying it. And if it comes back down to here, I'm going to buy it again. And my stop is outside, right? If it comes down, I will take the loss, but then I'm also going to look to sell, right? And that strategy is basically like a stop reverse. I get stopped out and then I reverse my trade, and instead of buying, I'm then going to look to sell. Right, most of this probably don't add up, but in time you'll be able to learn from someone who knows what they're doing, who is experienced, and you can be mentored from, but all in time. So look to buy the Euro US, that is definitely, and if you're going to buy, take your profit here. Take your profit right here. I am here to tell you, and this is either you're going to believe this or not. If this market goes up, should this market goes up, right? I don't want to make any guarantee, but should this market go up, I'm here to tell you it will go right here. I don't know if it will go all the way up the top, you understand, but what I do know, you understand, because the top is hard to call, the bottom is hard to call. We don't exactly show where the top is. You understand? Because even in its way going up to the top, look here. Let me zoom in and show you this. In its way going up to the top, it can go up and come down, go up and come down, go up. So, you understand? And you won't want to be buying here, and the market goes all the way up here, and you did not take profit, or to see that the market eats back away all your profit. You understand? So, I'm here to tell you this would be my first take profit. If it goes further, then fine, right? And I am pretty confident of this, right? I'm here to, and if this market does not break out and go bearish and does not go down, this market will go to this price point, 0.7151. If you don't believe me, open a demo account with a broker and demo trade this, right? And watch this market goes to that green point here, right? From current price point, that will be about 190 pips, right? That's a lot of pips. That's a lot of money right there. All right. So this is your boy Ed FX Trader, giving you an update. Take the time to subscribe to my channel, my YouTube channel, for updates, for insights, and stuff like that. And stay tuned. Your time of learning a skill to make money is coming. Because once you learn it, nobody can take it away from you. And you can do this for years to come, generating a proper return on your investment. Because this is an investment. All right. God bless you. And remember always, it is the Lord thy God who has given you the power to make wealth.